Good evening, everyone, and welcome to Admiral Markets webinar London Open System presentation. Today we will see how we trade London Open. There are two possible scenarios for London Open system and for London Open trading, and I have made some guidelines to you. Systems are called 3 Candlestick Breakout and B89. So those are systems which we will review, and both of those are used for trading London Open. Okay, and those are price action systems. Before I delve deeper into the systems, as always, our standard risk disclaimer. First page of risk disclaimer is explaining that all online educational materials are available by Admiral Markets as Estonia, and they're used for global audience. If you want to get a corresponding information on charting conditions and any other detail, you should visit www.admiralmarketsglobal.com, then select your country and contact an appropriate entity. Also, risk disclosure statement stating all possible risks associated with forex market. By accepting the risk, you're also proceeding further with me. Admiral Markets will take no responsibility for information accuracy. This is my opinion, personal opinion, and this is not a suggestion for a trade. This webinar is for informational and educational purposes only. Okay, with having said that, we are ready to proceed. As always, guys, Supreme Edition, you know that already. Great tool to enhance your trading. By logging in your trader's room, you can download Admiral Market Supreme Edition. You are trading with the officially best MT4 broker. Okay, so while on the session, 3 candlestick strategy, B89 strategy. Okay, so those are strategies which we will cover today. 3 candlestick and B89. Now, why do we trade London Open? Okay, so this is system solely for London Open trading. Okay, why London Open? That is also why that is the main question. Because first of all, London is the hub of forex trading. Volume turnover is higher than of Wall Street. Okay. Also, London is a great strategic location for all trading sessions. So even though if you're not living in Europe, it's somehow you can always basically try to trade London Open. Whether you're living in Australia, USA, that time is somehow adapted for trading. We are using GMT +2, now it's GMT +1 for London. Our platform is GMT +3. So basically, it's really strategic, not just location, but it's also good time-wise. And remember that almost 30% of all forex transactions happen during London session. Remember, London is the hub of trading. Okay, London is also setting trends. Okay, it's a trend setting time for our trading, because usually during first 3 hours there will be moves which will mark that London session volatility. But volatility usually dries off in the middle of session. That is because usually profit taking around London lunchtime happens. So remember that volatility dries off in the middle of session, and profit taking is taking place around London lunchtime. Remember, 34% of market share is daily forex volume happens during London session. 34% of market share. That's really big number. Okay. Also, London session overlaps New York. It's very, I can say it's advantage for London's traders. Now we are talking about London Open, But needless to say, London session overlaps New York session. As of December 2014, market capitalization was approximately $6.06 trillion. Okay? And London Open breakout trading uses stops just outside those ranges which we will try to find. So this is very important. London happens during Asia, and during Asia there is usually some accumulation and usually some distribution happens during Asia. But when London opens, that is when real trading begins. Okay? Remember that traders often put stops just outside ranges. That is the logic behind these strategies. When the market opens and a direction has not been definitely established, these tight stops are triggered by the increased volatility of the open. Stops on one side of the opening price are triggered, pushing rates out of the range boundaries and giving us a breakout trade. Once all the stops and weak positions have been cleared out, the initial move slows and often reverses. That is why London Open trading is applied prior to positional trading. Do not forget that we are talking now about London Open breakout trading. I will repeat again the logic behind the strategy. Traders put stops just outside ranges. Those ranges are established during Asia session. When London market opens and the direction has not been definitely confirmed, established, we use tight stops, and those tight stops are triggered by decreased volatility of the open. Then we have a stop grabbers, because stops at one side of the opening price are triggered, and that will push pairs outside of their range and give us a breakout trade. Do not confuse breakout trade with positional trade, because once all the stops and weaker position have been cleared out, we can see a reversal. That is why it's important to secure your profits, guys, and that is why we use profit stops. Okay, believe me, it's always advised to use profit stop when you're trading breakout on London. So we say that there is a range usually, and after the range has been broken, there will be stop grabbing around this region here, and we try to grab those weak stops. That is why once you're in profit, it's vital to secure your profit by placing a profit stop. It's a breakout strategy. Usually after a breakout, reversal might happen. Okay? That is why it's important to use the logic also. Now, advantages of London Open trading are, it's pretty much, guys, it's very simple. It's very simple. You will see. Okay? There are no indicators. The only indicator is the price, and on our B89 is 89 EMA. It's a very easy trading strategy that basically, no matter if you have your day job or whatever, you can trade this. So you will see how it's easy. And the thing is, that's breakout trading. I say again, this is breakout trading. Now, few tips for trading these. Usually after Friday, we can see basically that market is very slow on Monday. Maybe it's advised to stay out of Monday and Friday and try to trade it during Tuesday, Wednesday, Thursday. Because usually Monday and Fridays can be worse for London Open breakout, and usually Thursdays can be statistically better. So try to trade it during Tuesday, Wednesday, and Thursday. Try to avoid Monday and Friday, definitely. Okay. Now we will cut to the chase and let's see how the system behaves. So this is our 3 candlestick strategy. You use it on 1 hour time frame. Pound dollar is the pair and its price action. And guys, I can see that some people are still coming in. I will use just a little bit break because 8 people ran into a webinar in the last 3 minutes. So don't worry, guys. You didn't miss a lot. Really, nothing. Basically, I was just speaking about the advantages of London Open and the logic behind London Open. Okay, the logic. So if you miss this, this will be uploaded tomorrow and you will be able to listen to it carefully. The question Biri is asking, is it applicable if there is news during early London hours? Well, guys, usually you will not trade if there is news exactly at London Open. Because news usually will happen 30 minutes after London opens. So if you see that there is some news exactly at London Open, you don't trade it. You will trade it only if there is no news at London Open. So I'm specifically saying at the exact time, because you need to watch price action exactly at a time. London opens now at this point. It's 8 a.m. Okay, let me show you something because some of you might be confused really for the timing. I will open up a good website which will show you forex market hours. Let me open the site because there are 2 sites and not all of these are good. There is a site which is inaccurate, really. I will open the best site for this. Okay, this is your timetable for London Open. You can see it here. The website is named, okay, forex.timezoneconverter.com. Okay. Now, when you see this, you need to enter your time zone. My time zone is usually, you know what your time zone is, but let's say that my time zone is Euro Berlin. But you will know, because if you compare your time on your computer to this time, it should be the same. So that will determine your time zone. So just compare your own time on your computer to this time. It says 6:13 p.m. My time is 6:13 p.m. So I'm Euro Berlin, right? London opens at 9 a.m. my time. Okay, this is my time. It's 10 a.m. platform time. But guys, now follow me because you will need to use some boxes for charting your London levels, your London breakout levels. Remember this. If you're trading with Admiral Markets, which I suppose you do, our platform is GMT +3 at this point. So it's 1 hour ahead of me. So it's 9 a.m. my time, but platform is 1 hour ahead of that. 1 hour ahead, okay? So it's 10 a.m. Okay, it's 10 a.m. on our Admiral Markets platform. Remember that, because platform uses different GMT calculation. So if your time, let's say, is 8 a.m., your platform time is 9 a.m. if you're trading with Admiral Markets. But this is how you determine your time zone easily. Go to this website, enter your time zone, and it will write it down. So you see, New York will last till 10 p.m. my time. So it's very, very easy, right? It's not a problem, I think. Okay. Now, yeah, Goran is saying he noticed that when London opens, euro dollar at 80% of cases goes in a single direction, and then there is reversal. Well, that is what I was explaining, Goran. That is exactly this logic behind the strategy. You remember what I was talking about? The thing is that we need to grab those prices which are outside of the range boundaries. Okay, so we want to trigger the stops on one side of the opening price, and that will push the price out of the range box ranges, and it will give us basically the breakout trade. Then we need to clear all the stops and weak positions. Once all the stops and weak positions have been cleared out, price will reverse. That is why you see that the price goes at once in one single direction and then reverses. Because usually when those stops are cleared and weaker positions are cleared, there will be a reversal. Okay? So first strategy, 3 candlestick strategy, you should open 1 hour time frame. Pound dollar is your currency pair. 30 minutes prior to London open, you should open 1 hour pound dollar chart. Okay, you can snapshot the screen so it will be easier for you. Draw 2 horizontal lines. One line is for the high of the previous 3 candlesticks, and one line is for the low of the previous 3 candlesticks. Those previous 3 candlesticks are from Asian trading session. Okay. Now, when you do that, you need to go and you need to watch your buy or sell entries. Buy entry is 3 pips above the high, and your stops are 5 pips below the low of the previous 3 candlesticks. Immediately cancel the other order if your current order is active. Your sell entry is sell stop 3 pips below the low, and stops are 5 pips above the high of previous 3 candlesticks. Immediately cancel the other order if your current order is active or has been activated. Take profit. Profit stop usually after 10 pips. You use profit stop. Now these are suggestions because you will be trading with a breakout. Okay, it's not positional trading, guys. Remember that. It's not position trading. Do not be confused. This is one-time trading only. And it only happens if these rules have been met. If there is no breakout, guys, no trading for you. That should happen in the first hour. If it doesn't happen in the first hour, cancel your every single pending order, because this is London open. You don't position yourselves. Now, I'm not sure, there are a lot of people here listening to webinar. I'm not sure that you can distinguish between positional and breakout trading. You don't go with positional trading. Okay, positional trading is what I give you on my recap trades and those setups which I give you on daily analysis with Admiral Markets. So this is one-time trading only. I mean, you can trade it only during first hour of London. And if you don't have the order, then leave it for another day. Okay? Ilya is asking, how can we avoid false breakouts? No, there are no way to avoid false breakouts. This is the system with this you should avoid false breakouts. But even if you remember, I was teaching you how to trade false breakouts. Now these are the systems which assume that we will not have false breakouts. So usually profit stop, you should place profit stop after 10 pips. That means that if the price goes let's say 12, 13 pips, you can try to place a profit stop to entry plus 10 pips, securing 10 pips. Sometimes if you see that the move is heavy, you use next support and resistance, so it can give you 30, 40 pips. So you can use either a profit stop or next support resistance levels. But guys, my advice is move your stop as soon as the trade moves in your favor. That way you will be sure to secure some pips from the breakout. And usually those breakout trades are done independently so you can do it with your positional trades, because that is one-time trading. You want to take fast breakout, fast pips, you close your trade, and you next morning you can try to exploit it again. No positional trading with this. So what did I tell you? Okay, mark the Asian 3 candlesticks. So this is the time. Okay, this is the time. We should mark the levels. Mark the levels. After this candle here, we have a London breakout. This was the last candle before London opens. So we mark the range. Okay, we mark the range. Previous 3 candlesticks high and 3 previous candlesticks low. The range is marked here. This is the high. Okay, 1, 2, 3, and this is the low. So this is your range where those horizontal lines are. Vertical lines are showing the time, and horizontal lines are showing highest high of the last 3 candles. So this is Asia session here, and this is low and high. You see, pound dollar trade which happened today exactly at breakout was successful. Your entry is 3 pips above the high. So 3 pips above 52.57 is 52.60. There was a breakout entry. You can go with support resistance, in this case resistance, but sometimes you can even grab a big move, very big move. It's up to you how you will manage your trade, but advise to use profit stop once you're in profit. That's very important, guys, because you want to take only breakout trade with this. These are historical pivot points, and I use the chart to show you a trade from 5th of October, pound dollar. So this is Asia session. You see, from this point to this point is Asia session. 9-hour candle marks the basically it's just before London. Okay, just before London opens up. Now let me show you how it's done. Okay, neglect these lines. So this was basically the time of our last candle. 1, 2, 3. The height of this candle is here and the low is here. Now this is really a question from an answer to your question. Let's say that you have a false breakout. This is false breakout, let's say. But it's good because even here you managed to grab some of pips. At least you could make 10, 15 pips with this. And look what happened just afterwards. A possible short trade here. Let's say that this could have been a good short if it happened exactly at this point. But you see how market is telling you where to enter. I will open live chart later and I will show it also on live chart. But you see, even if this was a false breakout, you could have made some pips. That is why it's crucial to secure your pips once you're in a profit. Okay? And if this happened here, look, very good short trade. Now, B89. So we will get back to our 3 candlesticks now. Okay, I can do it now. It's not a problem. Yes, you need to be very fast. Indeed, guys, breakout trades this way are supposed to be very fast. Really supposed to be very fast. Okay. Okay, this is the screen, guys, and I will mark it up. Carolyn is saying something is not clear to me. In Romania, London is at 10 a.m. So I must be in front of PC at 9:30. Yes, for your time. Do I use the candles from the hours? You use previous 3 candles. Previous 3 candles. Okay, let's use this example. So previous 3 candles. Okay. Let's use this example. So this is the last candle prior to London Open. Okay. Watch me doing this. Okay. This is, okay, that's one. 1, 2, 3. Okay, let's find Asia session. 3 a.m. on this platform. Okay. The low here was clear. I will zoom it in so you can. So this is your low. This is your high. Because that is last 3 candles. I said last 3 candles. 1, 2, 3. Okay. So you wait for a breakout. Okay, right? So this is where breakout happened. And this was indeed a false breakout. Okay. It was good for some 6 pips. And look at this, what happened. Then we had a good breakout. That is why I'm saying, guys, even when you have false breakouts, try to secure your pips. Because next time, usually breakout will be true. Look at this. But we are counting on this first breakout. Because this is usually most profitable. Sometimes you will see a false breakout. But if you see that price is moving fast, then tries to reverse, stop it at break even. You will have the time to stop it at break even. But if you want to use break even, you need to be in profit first. Paul Pierre is saying, just checking, is it correct that entry can be made as soon as third candle prior to London Open closes? Okay, not third candle prior to London Open. I said it specifically here. Try to snapshot the chart. This is important. Draw 2 horizontal lines. One line is for the high of the previous 3 candlesticks. And one line is for the low of the previous 3 candlesticks. Those candlesticks are prior to London Open. So if this is the last candlestick which closed prior to London Open. This is London Open. And this candlestick closed prior to London Open. So you need to be fast. Mark the candlestick, okay, and try to exploit the breakout. Low, high. Let's use other example. Okay, let's remove these lines and let's find another example. Let's say when there is some sort of a trend, usually during trends, price is behaving correctly. Okay, here. 1, 2, 3. Basically, this candle has both highs and lows. Look, trade to the short side. Ilya is saying this is different explanation from what I have found on YouTube. Well, you will find a lot of these strategies. I have been trading London prior, before Camarilla MACD. Before, most of the time I do analysis on London Open, so I am not able to do breakout trades. But this is how I do it. So Ilya, do not be confused. There are probably, I don't know, dozens of London Open strategies. This is an old strategy, and this is how I traded back in time. So it's an old one, really. Old one, okay? And I see that people are still asking for London Open. If you're not, don't what your London Open time, open this website, forextimezoneconverter.com, and put your time zone. It will show when London opens. It's always different, guys. You need to pay attention to daylight savings, everything. So please use this table here. I explained everything. Use this table, okay? So this is the crucial, to draw two horizontal lines. I don't know how other people do it, but this is how I did it. As I say, this is an old strategy. I didn't make up the strategy, but when I was trading a London Open with price action, this is how I did it. This was a part of my PNT teaching. And this will be also shown on price action webinars when time comes. So look at this, breakout here, and look. Even here, 27 pips before some retest and continuation. Indeed, Goran is saying the price has made a retest as in school. This is a scholastic example for retest. Indeed, look at this. Yes, Ella, for Admiral Markets platform, this is the last candle. Okay, what is the time now on the platform? 7:33. Look at this. This candle says 7. Look at here. It says 7. So when you see the candle time, candle usually uses the time at the candle open. So this candle has opened at 7 o'clock and it will close at 8 o'clock. Okay. Same here. This candle opened at 9 o'clock and it closes at the first second of the 10 o'clock. So that is when breakout happens. That is when breakout happens. Again, same thing here. Breakout, first breakout, 20 pips. Next, this is maybe a false, but 20 pips, guys. It's not that bad, right? And next candle, you see, bang. So you need to be fast with your fingers. Try to grab 10 pips and stay out, 15 pips. Okay, let's use another example and then we will move to B89. Okay, we can use this one, previous day. Let's see. And then I will show you another strategy which uses 89 EMA. Okay. So this candle has, okay, you count. Now watch me do it. 1, 2, 3. This is the low, this is the high. Look at the breakout. So guys, this will be the part of price action breakout trading. I will present this way of breakout London open trading on price action webinars. Now you learn it beforehand, but this is a part of practical naked trading which I'm presenting you in price action trading school, pets. Look at this, low high, and look at the high. 53 pips maximum. Take 10, 20, 30K. Take it and leave it. You're ready to go. See how the price behaves. Let's move now to B89. So this is 3 candlestick strategy, price action breakout, London breakout trading. B89, time frame 15 minutes, currency pairs, pound dollar, euro dollar. Same price action with only one indicator, 89 EMA. Why 89 EMA? Can someone answer me? Why do we use 89 EMA, guys? Please, I want to see answers. Why do we put for this 89? Yes, it's a trend filter. Exactly, Vefo. Marco, Fibonacci. Indeed, Marco. This is a Fibonacci number. 88.689, guys. The power of universe. The power of 88.6. Carolyn, because Nenad says so. Indeed, but 89 is a good number. Next webinar, I think, is Fibonacci Price Action Trading School. And I will explain why Fibo 89, 88.6 is so good. There is some logic behind it. So yes, you were right. You were right. Ilya is saying Nenad is cooler than Chuck Norris when he trades Forex. No one can beat Chuck, even myself. Maybe Vin Diesel only. Not sure about it, but maybe. Fast and Furious. So you see, B89 uses 15-minute time frame. We can trade two different pairs, pound dollar and euro dollar. It's a price action method, and these are the rules. Now, guys, snapshot this chart. These are the steps you need to see. It also uses box, but a little bit different than my price action London Open method. It's a little bit different. Okay, so try to spot it. I will leave you to snapshot the chart. Okay. So first step, open a 15-minute chart for pound dollar. Maybe. I usually when I trade it, guys, I did it on pound dollar. Because, you know, pound is the symbol for a national currency of UK. So usually when London opens, pound dollar moves the best. But also it can be applied to euro dollar. We will see euro dollar examples. Draw a vertical line at 4 GMT time on your pound dollar. Now this is different, guys. You need to draw a vertical line at 4 GMT at 6 GMT. Okay? So this is not my method. This is one of the methods I have taken from Forex Factory back in time. I think that this method is 6 years old. And I basically traded this one. But I remember there was a thread on Forex Factory which explained this method. And it was good. So you can try it also. Open 15-minute chart for pound dollar. Draw a vertical line at 4 GMT. Draw a vertical line at 6 GMT. Draw a horizontal line at the high of candles bars in between vertical line. Yes, indeed, Nat is asking 4 GMT and 6 GMT in both daylight savings and normal times. Yes, GMT is always GMT. Okay, so you need to adapt to GMT in this strategy. If you are GMT plus 3, it doesn't matter. You need to use GMT always. Okay, you need to know what is GMT time and then apply it. At this point, GMT is 4:39 p.m. It's 2 hours behind my time. It's 1 hour behind London. Okay? Carol is saying, if markets are constantly changing, does this 6-year-old strategy work? Last time when I checked it, it made some good pips with breakouts. I will show you. But you need to know one thing, Carolyn. Markets do constantly change. But the thing is that one thing is always for sure. When you trade breakouts, it will always use stop grabbers to make you pips or losses, always. John is saying, what's the reason? This is the reason. These are London Open strategies. So we are not talking about standard breakout. Even standard breakout is also collecting stops. London Open uses Asia range. Now, I cannot talk about market cycles, but usually during Asia there is accumulation. At London there is distribution. Now, the thing is, traders use those ranges which have been established in Asian session. And usually those orders are put above this line, below this line. Once those orders have been triggered, you grab the stops, guys. Because people who are short, they put their stops above the range. And all those stops are collected. Now, this is why it always works. But the thing is, it will not work if you don't take the profit before breakout loses its steam. That is subjective always. That is subjective. We don't know if the price will indeed move for 50 pips or 10 pips. You need to watch the charts. But you do it once per day for a very fast time. I personally knew there was one trading friend of mine that 6 years ago that traded only during London Open. Once London profit has been taken, she closes her charts and she goes away from her PC. So some people trade only London Open. So those are the reasons, guys. There will always be traders who will put orders above and below Asia session. When those levels are triggered, the opposing traders will lose and their stops will be grabbed. The only thing is you need to take the profit, else the profit will take you. That is the nature of London Open. And indeed, markets are constantly changing. That is why we apply different strategies for positional trading. London Open is different dimension. Okay, so these were the rules. So if 90 AM crosses the box, no trade. If 90 AM is above the box, we place a pending sell order. Yes, EMA is Fibonacci number and it's a filter. Okay, and now this is if 90 EMA is below the box. Okay, we place a pending buy order, 3 pips above the high of the box. No trade, guys. Okay, we mark the sessions here. Okay, 4 GMT on Admiral Markets platform is 7 AM GMT. 6 GMT on Admiral Markets platform is 9 GMT because it's GMT plus 3. We mark the lines, we see where 89 EMA is. So according to rules, we should take buy entries because this level was not broken. There was no buy entry. So no trade here. Okay, no trade here. Profit, guys. Next slide. 89 EMA is below the box. It should never go in the box. If it pierces the box, then we don't take a trade. The rule is that EMA should be either below the box or above the box. No in between. So we want to go for a buy trade. This is your trade. 5th of October, Euro Dollar, London Open. Now, you can trade this, the first breakout. So if it doesn't, it will, because you're trading on 15-minute time frame, it should happen during first hours. So you trade only this one. So only where the rules are met. You can do it at 89. Yeah, maybe that is put also to avoid false breakouts, but this is indeed a trend filter, because we assume that if the price is at the start of London Open above 89, that the trend is to the upside. So you want to take trend trades. So yes, this can be a filter. Although, as I said, I traded a little bit different. Practical naked trading suggested there was no EMAs, but yes, this can be a good filter. That is why I'm presenting you two different strategies, so you can practice, so you can see what works you the better. Okay, so that is where you make your profit. Now guys, I will open live chat. If you have any questions, do not hesitate to ask me. But I think this is clear. You know what I love to do the most, to present you with clear, very clear rules for systems. I don't want to be boring and too complicated. Okay. Yes, Ilya. When you see 89 EMA through the box, you don't trade. So let's do it once more. 7 o'clock. Okay, we will use this example. 15-minute time frame. 7 o'clock, it's 4 GMT, it's 7 o'clock our platform. And 6 GMT, it's 9 o'clock. $89 exponential. Look, below the box. Okay, what did we say? Below the box, guys. Let me, because probably it's not clear to you, this is what you should focus. I will leave you just to snapshot the chart, the snapshot this slide, so you can know what I'm talking about. And this one also. We still use high and low, guys. It's very important. We still use highs and lows. In between the box, this is the high. Indeed, this is the low. 89 EMA is below, so we take buy trade. Here is your trade. At the breakout, 3 pips above, look. Straight to the upside. Okay? So that's it, guys. Easy. Easy. If I traded this setup, definitely I would put my stop loss below the box. Below the box. But you know, sometimes your stop can be also placed below the last low. So if this was the last low here below the setup candle, that can be also your stop loss. But that is too aggressive. Usually your stop loss is placed here. Or let's say this is pivot point below the pivot point. Okay, so there are a couple of ways how to place your stops. Okay, so either below the candle, this one previous, either below this one, or if you see that it's going in your direction, then you try to secure the profits immediately. You can do that by pricing your trade to break even, and if there is really a strong breakout, you will get a lot of pips indeed. Okay, simple and effective. We will cover this also on Pat School. Do not forget to sign up. Tomorrow I will have a webinar with Chris, our mutual webinar. And remember, I need to tell you that this week's session recap was awesome. Pound dollar trade, excellent. Euro dollar trade, excellent. Australian dollar trade, I told you to take profits by Twitter. I use Twitter, so you could have made more than 200 pips. I will show you on Monday. Thank you guys for listening. Aha, Vefo is saying again, Yes, I will explain. Can you elaborate on the TP, the break-even stop condition, and the trailing stop method? Indeed, target is, as I say, target is always up to you. This is fast breakout. We don't have a rule for target. We can hope that it will go, it's up to money management. If this is resistance here, which it is, we want to take profit ultimately here at next resistance. But once we are in profit, we can move our stop loss to entry point. It's called break even. Okay? Once we made, I don't know, profit to this point here, we can move our stop loss to this point here. So that's called profit stop. It's up to you. There is no strict rule. There is no strict rule. Remember this. So you go it as I'm showing. Take profit here, but ultimately you want to price to reach first resistance, wherever it is. Stop loss can be placed below this candle, but also it can be placed below last low. I would place it here. Definitely using lower lot size, definitely. I'm not too aggressive. I'm very conservative with stop losses. Okay, so I hope that really explains your question, Vefo. If something is not clear, please do ask me. Okay, Vefos is saying thanks. You're welcome. So guys, try to do this. We will cover this at Price Action Trading School also. But at this point, this is a separate strategy. This is indeed a part of Price Action Trading School. But it's a separate being because you can trade it during London session. Okay, so thank you for listening. I don't see any questions. As I'm saying, I will be here with you soon. I wish you always to have good profits and to have a great evening. Cheers everyone, guys, and trade safe. Thank you.